Well, recent homebuyers affected by higher interest rates may be surprised to find out that a lucrative tax benefit taken on itemized returns is back in the picture. Here to explain more is Yahoo Finance's Rebecca Chen. Rebecca, what are we talking about?
Hey, Akiko. So on the show, we've talked plenty about how high mortgage interest rate has been hurting home buyers. But today, we really want to highlight how high mortgage interest rate, in a rare silver lining, can actually help home buyers. And essentially, it is known as the mortgage interest deduction on your itemization, or otherwise known as the Schedule A. So essentially, taxpayers, they can deduct the amount they pay for mortgage interest on this itemization. And as you can see, and if we really talk about how much over here, it's really quite a chunk. Let's say if you recently purchased a home and then you have a loan for about $500,000, you can get a pretty good size interest deduction, which is around the price about $36,000, and that just is way more than the standard deduction that most people have right now. And this really isn't something that has been on the radar for many home buyers, because for the past couple of years, rates has been so low that nobody really took advantage of this, and you really can't, because it made more sense to go with the standard deduction. But given that today, the combination of high home prices and high interest rate, this is definitely coming back in the picture.
Rebecca, the median U.S. home price is around $400,000. How many new home buyers can actually take this benefit?
So that's a great question, because normally when we think about itemization, you really think about a very few Americans who can take advantage of that. But given today's just basically high home prices, you can see all the new home buyers, even the ones who purchase a median price home or ones below, you're getting almost $23,000 of mortgage interest deduction that you can take on your tax return. And even if the home prices you have is a little bit lower than that, you can tack on other things like charitable deduction, your property taxes, your state income local taxes, and even medical expenses to really push up that deduction. So again, when we're comparing this to standard deduction, if you're recently a new home buyer and then you lock into one of the higher rates, whether it be 6%, 7%, or 8%, even 8%, you're really getting that benefit that you can take advantage of. So a lot of experts I've spoken with said, right now, if you're paying this, your mortgage payment, monthly mortgage payment, and it's pretty steep, just think about how the principal is going towards your equity, but your interest that you're paying is going towards this tax benefit. So definitely what we're seeing is for people to take advantage of this, because this advantage is back in the picture, it's on the table. So if you are in a position to can take that deduction, definitely go for it.